Ladies and gentlemen, it has finally happened. People are waking up and they now know that all the jobs that the government was putting out there to say, look how great the job market is going, look how great the economy is going, have been fake. And even the jobs they are creating are very, very weak and low paying jobs. Now, the markets have woken up to this. Last week, we had the worst sell-off for the NASDAQ and the S&P 500 since 2023. Since my last video, we've had huge things happen. We had the Black Monday event with Japan selling off 12% in one day. We have huge events happening in Europe with Volkswagen having to close factories because they simply aren't competitive anymore. And Germany is the biggest economy in Europe, so if this has a big impact on the German economy with a lot of these high-paying good jobs taken away, this will have broader implications for all of Europe. We have the election going up, we have chaos happening in the UK, there is so much happening, we have so much uncertainty in the markets. So everyone, you know what time it is. Let's get straight into the news, the facts, and the data. So first things first is everyone, look at this. Stock futures slip after the S&P 500 suffers its worst week since 2023. So why exactly are the markets selling off so heavily right now? Let's keep reading. So these declines came after the August jobs report, which stoked fears of a slowing job market. Economic data released Friday revealed that non-farm payrolls grew by just 142,000, missing the 161,000 gain expected by economists surveyed by Dow Jones. But we'll dive a bit deep into this report, people, and I think big money is realizing it's much worse than this. So this week, investors will watch out for key inflation reports that could further inform the Federal Reserve's decision at its next open market committee meeting. And August consumer producer price reports are slated for release on Wednesday and Thursday morning, respectively. So what happens, because everyone's hoping that they'll do a 50 basis point cut, which I don't think they'll do at all. I think it'll just be a 25 basis point cut, which is 0.25%. If they don't do this, and what happens if we get that inflation is accelerating? Well, this could lead to what I've been warning about, stagflation, because they're all saying inflation is gone, it's dead. When, yes, we don't have as high as inflation as 2020, 2021, 22, we still do have prices going up rapidly. But the real reason I think the market sold off so much last week is because they know we're not heading into a recession. We are in a recession right now. You just go walk down the street on any strip and you'll see there is retail store after retail store closing down. They're simply going out of business. It is like a plague going through all these city centers or these local strips you see in smaller towns. When I'm walking down the street, every single day I'm seeing another store close. And look at this, Macy's set to close 55 stores by end of 2024. So you're seeing more and more of this retail apocalypse happening every single day. And like I was saying before, Volkswagen considers historic German plant closures in cost drive. So everyone, if the biggest car manufacturer in Germany is closing, that's showing things for Germany aren't very good. And again, Germany is the biggest economy of Europe. So if they go down, it's going to have ripple effects across the whole Europe when we're having other events happening across the world. Like in Asia, we see the issues, what's going on with Japan right now. Their currency is plummeting, the economy is plummeting, but now their central bank is having to lift interest rates to save the yen. This could cause a huge financial crisis in Asia that could have ripple effects across the whole world. But this is what we really need to talk about, everyone. The fake jobs reports they keep putting out. The markets have been believing them in the past, but I think they are now waking up to us, people that are out there in the real world that know the jobs aren't out there and the jobs they are creating aren't good jobs. So other than a small 1% improvement in the unemployment rate, this was a very poor jobs report with private payrolls only up 74,000. But when we dive a bit deeper into this report, look at this. So this month employment rose by 168,000 versus payrolls up by 142,000. However, full-time employment declined by a whopping 438,000 and manufacturing shed 24,000 jobs. So this is why you can't just look at the headline figures, say, look at these hundreds of thousands of jobs created. We could have 0% unemployment and they could be creating millions of jobs, but if those jobs are only people flipping burgers earning $15 an hour, people can't live on that income in today's world where everything is so expensive. And look at this, job stats versus 1 year ago. So full-time employment is actually down by 1 million jobs. So they've been fooling people by saying, look how many jobs we're creating, look how many jobs we're creating. Well, if you're employed and you're working 2 hours a week or 1 hour a week, or maybe even just 1 hour a fortnight, your class is employed, but you're not making ends meet. It doesn't show a real picture of how strong the economy is. Full-time employment will show a better picture. And as we can see, that's declined by 1 million jobs. Now, again, everyone, like I said, you need a brace for a heavy sell-off, and Reuters just put out this report just 20 minutes ago that says things in the global markets are going to get very, very volatile. Because Japanese futures point to the Nikkei opening 3% lower, dragged lower also by yen strength, another indicator of the risk aversion that is in the markets right now. Well, I know what you're thinking, everyone. Well, okay, how can we protect ourselves against all this uncertainty in the markets right now? Well, everyone, what has been performing well while there's been all this chaos in the markets? Well, that's gold. Gold is around $2,500 per ounce right now. And we are in a recession, people. And when this recession gets really, really bad, people are going to flood to the safe haven asset that is gold. Not only do we have a recession, but central banks are about to start printing money like crazy. They're about to start lowering interest rates at a time when we still have inflationary pressures. They're about to start the money printers again. They're going to devalue their currency, but the one currency that has stood the test of time is gold. And as their currencies get devalued, gold will increase in value. Now, that's the end of the news segment part of this video, and I now want to talk about today's video sponsor, Gold Mining Inc. That stock ticker symbol GLDG. Because look at this chart, everyone. Money markets accounts just hit 6.24 trillion, a new all-time high. Now look at this next chart at the fear index, the VIX, which hit the highest it has ever clocked outside of 2008 and the March 2020 panic. Now, Gold Mining Inc. is trading for 93 cents right now, which is near its 5-year lows. Now, when I think about the 6.24 trillion in money markets accounts right now, and the Federal Reserve potentially cutting interest rates for the next year, if not more, according to future markets. When I think about the gold stock index, the GLDG, hitting a fresh 52-week high as we speak, and I look at Gold Mining Inc.'s value proposition in near-term catalysts, I feel urge and need to present it to you. So what are the catalysts coming ahead? Well, the company owns 80% of Alaska's gold exploration and development company, US Gold Mining Inc. It's a position that is currently worth around $50 million US, and that company is in the middle of drilling right now. The company owns a 25 million position in Gold Royalty Corp, one of its fastest growing royalty companies in the natural resource sector. And Gold Mining Inc. owns 75% of a uranium project that gets almost zero attention, even though the founder of the company and its present co-chairman is Mr. Amir Adani, the founder of Uranium Energy Corp, a multi-billion-dollar uranium company. So think about that for a second. The project is located in the Athabasca Basin in Alberta, Canada, one of the best uranium areas around the globe, and it's co-owned with French uranium giant Orano. In select previous instances where Gold Mining Inc. has performed well, we track performance against gold price during a bullish run in the price of gold. And here is the past performance. Gold Mining Inc. outperformed the price of gold and the GLDG index, a basket of junior explorers, both by a considerable margin. So as you know, Bank of America predicts gold could hit 3,000 by the end of 2025. And here is exactly what analysts have said. We believe gold could hit $3,000 an ounce over the next 12 to 18 months, although flows do not justify the price levels right now. Achieving this would require non-commercial demand to pick up from current levels, which in turn needs a Fed rate cut to happen, which could happen very soon. So according to the World Gold Council's central bank survey, 30% of central bank respondents said they intend to increase gold reserves over the next 12 months, which is the highest level we have observed since they began the survey in 2018. So I remind you that Gold Mining Inc. has a market cap of $170 million now, with gold at $2,500 an ounce. Yet when the company originally acquired their portfolio of gold projects in the bear market from 2010 to 2012, gold was trading at levels well below $2,000 an ounce. And peak combined market caps of companies that held them were approximately 850 million Canadian, which during that 2010 to 2012 was much closer to par with the US dollar than today. So peak market caps were calculated based on each respective company's peak share price during the period prior to acquisition. Now I bring up another chart here of the dollar, and you can see the dollar is clinging to its 5-month support. So that is my personal opinion, and one of the key reasons for forming this view is that today, with gold at $2,500 an ounce and the GLDG index, which aggregates junior mining stocks, sits at $43 compared with $167 in 2011 when gold peaked at $1,925 an ounce. So to put it simply, everyone, the peak market cap of the companies acquired were 850 million Canadian in 2010 to 2012. Current market cap of Gold Mining Inc. is just around $164 million in 2024. And a gold spot price in 2019 was $1,900 an ounce, when now it is around $2,500 an ounce. So to me, it's a no-brainer. So start doing your due diligence today. So everyone, thanks for watching. You're awesome. I'll see you all in the next video.